Hey everyone, I want to thank you for joining on part 3 of the 401k options. Last time we talked about the missed opportunity in rolling your 401k over. We're going to talk today about the maximum 401k contributions and what to do when you've hit that number. We're going to talk about what if I can't find a way in my budget to be able to get money out and be able to put money into the 401k, even though I'm getting a match. I'm going to tell you a specific example. And I'm so proud to say, thank you all for sharing so much as you have been. I'm getting private messages with comments that people are asking, questions that people are asking, and all of that we're going to be talking about today. When I say 401k, I'm talking about 403bs, 401as, TSAs, TDAs, 457, all of your tax-deferred savings plan, and of course the disclaimer, everything we're talking about here is food for thought. It's great questions to be able to be asking someone so that you are able to get the very best and enjoy your retirement. That's what fundmax.net is for. So you're able to enjoy your retirement. I'm George Wells. I run a private practice on retirement planning where I answer questions for individuals, and we've taken it live over the last few weeks so that you're able to get your answers. And we've had thousands of people watching it. We've had so many questions. Thank you so much for sharing. Thank you for giving it to others. Let's get right to it today. I asked before about the magic age of the 401k versus the IRA, and I got a few people that made comments on what the answers are. I'm going to give that answer today, but you still have time today to be able to make a comment on what you think is the difference between the magic age of the 401k versus the IRA. Okay, I got a story that really kind of saddens me a bit from someone that rolled their 401k over to an IRA, and I talked last time about asking before you roll your 401k over, and please write this down, if there is any after-tax money in the 401k plan. You want to ask your employer, is there any after-tax money in this account? In this story, this individual wrote in and said, my father rolled $271,000 from his 401k over to a extremely well-known institution. You would certainly recognize the name. And come to find out, after we heard what you had said, we went and checked out and found out that $63,000 of that money was after-tax money, and it could have gone directly into a Roth IRA. And the problem is, the well-meaning people at the institution that we called didn't know anything about it. They didn't know anything about the Form 8606. They didn't know anything about fixing it afterwards. And here's the thing. This is what she told me. She did the math because she's very mathematically inclined. She said 30% of the money that's in my dad's plan is going to be taxed unnecessarily because of what we did, because we didn't know. Thank you so much for letting us know, but more importantly, thank you so much for letting others know so they don't miss this opportunity like we did. So here, in summary, before you roll over your 401k, you want to ask the plan administrator, is there any after-tax money in the account? And you want to separate that money. What it's going to mean is you're going to get two separate checks, each payable to the receiving institution. One is going to be for what's going to be your new IRA, and the other is going to be for what is going to be your new Roth IRA. And that Roth IRA money is going to go, that after-tax money is going to go into a Roth IRA, and you're never going to be taxed on it, never on the gains. If you pass it on to your heirs, you will never be taxed on that money ever again, ever, only because you knew to ask. Okay, next topic. On that, if you do fill that out, and this is a tax professional you want to talk to, don't take my advice. Talk to a tax professional. There's a form. You can ask them about the 8606 form and how to fill that out. Any questions that you have, there's a link on there that says get in touch with FundMax. You can click on that and send us a private message. That's why a lot of these messages you're not seeing to the right of your screen is because people are sending it in as a private message, anything that's private, anything that's your own personal information, send that in. If you're watching this after hours, like so many are, send us a private message and we will engage with you. We'll answer your questions. And today we're going to talk about a couple of bonus topics as well. I'm going to give you that information, time permitted, as well. The next one is, if you can hear me, hit the little wow button. If you can hear me okay, hit the little wow button there that lets me know that people are able to hear me. Okay. I had someone write in and said, I don't feel like I can contribute to my 401k. My company has a match, but how do I get started in contributing? I've got all these bills. I've got a situation. I'm trying to barely thing. I'm going to give you specific, I'm not going to give you their name, but I'm going to give you specific information. They're earning $60,000 per year. They get paid bi-weekly. The company has a 5% match, and the question is, how do I get started? And if this is your situation, pay attention. Start by contributing 1%, only 1% of your income. It's $23. For this person, it was $23 per pay period, and it comes off before taxes, so it's really costing them about $18, and they're getting a match of 100%. So they put in $23, the company puts in $23. And how to get to that 5% is make it so that the next month it goes to 2%. And the next month it goes to 3%. You'll never miss it. And the next month it goes to 5%. And now you're at 100% match, and you'll never miss the money coming out because it's coming out gradually. You're saving 10% of everything that you earn is automatically going into your 401k, and you just started out little by little by little by little. Start saving that way. Questions that you have on this, send me questions, send me comments. We'll cover them into more detail if you prefer, if you choose to do so. Then, how to continue on with that, the maximum contribution for the 401k right now is $18,500 per year. So if next year you get a raise, don't give it all, but let's say next year you get a 5% raise. Take half of that and contribute half of it to your 401k. So you get the reward of getting a raise, and you get the reward of putting money into your 401k. That's how you do it. Next, I got a list of questions from someone that I want to be able to go through. They asked, what stages and what ages should we be thinking about aggressiveness in investing and changing from a more aggressive to a more moderate, or even less aggressive, even very conservative? Then the kind of question I'm going to put two together says, what really aggressive ways are there to invest? Because most financial advisors I've heard talk are so risk averse. It doesn't seem like they have any good, real aggressive investment plans. But if I wanted to dedicate some to being super aggressive, where do I put it? First, let's talk about what aggressive means. Aggressive is a connotation that really means I'm willing to tolerate significant fluctuations up and down with the hopes of getting a fantastic return over time. So aggressive is more, hey, listen, if I wake up one day and it's down 40%, I'm still contributing to it. It's not that big a deal for me right now. I want to go for it. I want to get as much as I can. How do I do that? And here's the difficult thing. This is one of the reasons you want to be thinking about rolling your 401k to an IRA, is because in your 401k, generally, you have stocks and bonds, which are held as mutual funds. A mutual fund is a collection of stocks or bonds. You have domestic in the United States and foreign outside in other countries, and really that's about it. Aggressive is basically trying to buy a fund that would mimic the S&P 500. So as the market goes that you see on TV each day, so will your account go. And that typically is the most aggressive form of investing over time to be able to get the most from it. And as you go and get closer to retirement, you start tapering that back. So those major levels of fluctuation that the markets may experience, you're not seeing those in your own retirement portfolio, especially when you have significantly more money. I'm going to answer briefly, and then really I'm going to depend on you to ask further questions for me to get into this into more detail, and I will do that as you ask questions. The next one is it ever wise to borrow money from my 401k? Generally speaking, the answer is no. And most professionals will tell you no. But here's the key. Any type of financial advice, and what makes giving financial advice so difficult is it's a lot based on your disposition, how you were raised with money, how willing you are to tolerate those fluctuations, how aggressive you are as an individual or careful you are as an individual. And the true method of giving proper financial advice, in our experience, is really being able to understand that disposition and understand that value system. But back to the question on the 401k. Generally, you don't want to take money out. And when you do take it out, you have to pay interest to yourself. If you don't get it paid back, then you're going to have to pay a penalty to the IRS if you're under the age of 59 and a half. If you switch jobs, you have to settle up with that 401k loan that you took or pay the penalty and the interest and the income taxes on it. It's more of a triple whammy. And when you're putting money back into it, if you're in the 25% tax bracket, if you're in the 25% tax bracket and you need to pay back $100 just to pay your federal income tax, you have to make $133, pay 25%, which ends up being $33 in income taxes to be able to get $100 to put back into your 401k. So generally, your 401k should be as sacred as great-grandmother's china. Don't touch it. Leave it alone. Just look at it. The 401k, watch it grow. And how much is enough in an IRA? How much is enough in a 401k? The movie, what was it? The Greatest Showman came out and they sing the song, Never, Never Enough. I'm not going to sing it. You'll never, ever, ever have enough in your 401k plan. You'll never have enough. Save and save and save and save and save. I want to go on because I want to tell you this story. It's a great story. I had a gentleman couple that was referred to me, and they came in and they said, we just want you to take a look at what we're doing. We don't want a financial advisor. We're fine on our own. We just need you to take a look and tell us if there's something that's missing. And I'm going to go through this example extremely quickly, but the reason I'm going through it, one of these is it is a testament to our process with FundMax. This is exactly what we do. This is exactly how you will experience us. It may sound like it's too good to be true, but this is how we do it. It's how we've always done it. This couple came in. They had done very well for themselves. I'm going to call them Mr. and Mrs. Jones. He's 57, she's 56. Their income is $420,000 per year, very healthy income. They have $2.2 million in their 401k plan. They've done a great job of saving. $250,000 in a deferred compensation plan, $300,000 in a Roth IRA, and $2.1 million in after-tax money. Now I want to stop and say the split that they have between tax-deferred money, they're just over $2 million in the 401k, and the $2 million in their trust is fantastic. When they're retired, they're going to have all kinds of options of where to take money to be able to control their income tax. That's a fantastic split. They came in saying, people are pressing us to do the Roth conversion. You need to do the Roth conversion. Don't you know, when you're 70 and a half, you're going to get blown away with income taxes. Well, I'm not going to get into the detail, but I did not recommend that they did a Roth conversion at all. And I will tell you why. I'm planning on telling you on Thursday based on how questions come back today. But what did apply and what does apply with the 401k is they were maxing out their 401k. Currently, in 2018, you're able to put $18,500 in your 401k if you're under the age of 50. And if you're over the age of 50, you're able to put $24,500 into your 401k each year. They're maxing out their 401k, both of them saving as much as they possibly can. But as I got in and I was asking them questions and questions and questions, sometimes you're allowed to put in extra money even beyond when you've matched your after you've done your match and you've done your maximum 401k. In their case, he was able to put a maximum of $60,000 in his 401k, $24,000 of which is tax deferred, so it deducts from his income taxes, and the other $35,500 goes in as after-tax money. And a little quiz, After-tax money comes out as what? The Roth money comes out as a Roth IRA. So that $35,500 that he's able to add each year between now and when he's retired is going to come out tax-free. Tax-free for him, for his wife, for his daughter. Anyone that's going to receive that money is never, ever, ever going to pay taxes on that money ever again. So take note. If you are maxing out your 401k, you may have an option to contribute above and beyond, and many people do, above and beyond for after-tax money, which becomes a Roth IRA. And if you're in an income situation, like many people are, in this one he's earning $420,000, $35,000 a month. They expect to need $15,000 a month in retirement. His taxes are going to be so much lower when he's retired. Max out your 401k, pre-tax and after tax. Well, we went through a lot of things today. So many of you are watching this video afterwards. You can share it with others. If you share it with your friends, we really appreciate that. If you don't feel like it, don't share it. Don't worry about it. Write us private comments so that you can ask us questions, because that's where all of this material comes from. I'm so thankful to be doing this. I'm thankful for the kind words that we've gotten, the feedback that we've gotten back. Give me questions that you have. I'm just seeing if I missed anything this week. And you know what? If you ask questions, I'm going to go into some of these. I went very quickly today. I probably tried to cover too much material. I'll go into some of these in further detail next time based on your questions. Thank you so much for watching. Thank you so much for tuning in.